Good morning, everybody, or good afternoon, depending on where in the country you're located. My name is Reid Thomas. I'm the head of sales and marketing here at NES Financial. And with me is Scott Ramsey, who's our head of product management, product development.
Good morning, good afternoon. How you doing?
We appreciate your interest in joining us this morning. We've got an agenda that'll take us about 30 minutes 20 to 30 minutes to go through in its completion. Of the agenda, we'll open it up for questions and answers, and that'll be your opportunity to submit any questions that you happen to have. And Scott will fill you in on the details on how to do that at that time. Today, what we wanted to do is walk you through, very briefly, a little bit about our company and what we do. Talk specifically about our EB-5 solutions and show you a demonstration of some new products that we have that help regional centers manage the flow of funds through the entire process from I-526 submission through I-829 approval. We'll show you a product demonstration and then turn it over to questions and answers at the end. In terms of background on our company is a technology-powered services company. We specialize in delivering services that help companies and banks, frankly, manage complex financial transactions. Specifically of interest to this group is our solutions in the area of EB-5 escrow administration, but we also do other types of complex escrows. We're also quite well known for things like 1031 tax deferred exchanges. We have a very scalable platform. Last year alone, we processed more than $85 billion in transactions on our platform. The technology that we use, client services that we have, are unparalleled in the industry and are developed completely in-house. I think of interest to many is our focus on compliance, security, and transparency. And so, as you can see by the acronyms there, what those things are compliance standards that we work towards and do annual audits to make sure we're compliant with every year. So SSAE 16 is actually a standard that banks use to have bank charters in the country, and we do something very similar. And it measures our security and our processes and all of those types of things on an annual basis to make absolutely sure that investor funds are safe, secure, and that everything we do is transparent and consistent with the regulations in the country. We are headquartered here in San Jose, California, but we also have offices in Boston and Chicago, so we can provide services to clients in their time zone of choice. In terms of the EB-5 sector, we focused very specifically to develop solutions that meet the needs of regional centers and the regional center investors. EB-5, as you know, has some very unique requirements. It's relatively new for many banks in the country to be able to deal with. There's some potential concerns for banks dealing with funds that come internationally like this. In this day and age of increased banking regulations and requirements, banks are very cautious about how they process and manage these types of funds. And so our solution, being tailored specifically for EB-5, helps them be very comfortable in providing banking services for these types of applications, and also is of great benefit, we think, to regional centers in the country. Part of what we do, we've also streamlined the whole document process and escrow administration process, and our solutions can be implemented very rapidly.
Yeah, that's sort of part of the special sauce here as we develop product, right? It's these great business processes with the administration of our client services folks with technology overlaid.
Exactly. So what we're going to talk about specifically today are some new products that we're introducing into the marketplace. We're most well known in the EB-5 industry for our subscription escrow solution. Today, that product's deployed at over 85 regional centers in the country. We're excited about that. We're probably active currently with over 120 projects at the moment. And the reason it's been so widely deployed is because of the benefits it provides to regional centers. It helps regional centers better manage the funds for the individual investors. It also provides increased transparency and security for investors. With the success we've had in that product area, we've continued to try to meet the needs of our regional center customers. So 2 weeks ago, we introduced 2 additional products to add to our suite of solutions. Specifically, those products are an EB-5 construction escrow solution and what we call an EB-5 capital return escrow or account solution. The idea here is that as money in the subscription escrow, as you successfully raise capital for your project, the next phase is for that subscription money to move into actually developing what was intended to be developed as part of for the project in the first place. And very frequently that gets implemented in the form of a construction escrow through which there can be drawdowns on those funds as at the various stages of construction. And then after construction is complete and the project is in play and jobs are being created, the investors, depending on the unique characteristics of the initiative or the project, the investors earn a return on that gets paid back, and their principal can get paid back at the end of the I-829 solution. So the regional center really needs to track this flow of funds, not just until 526s are approved, but right through until 829s are approved several years later. So we have extended our product line to be able to provide for regional centers a complete audit trail flow of funds from beginning to end. And we think that obviously provides operational efficiencies for the regional center, also provides benefits for the investors because when the time comes for them to submit for their I-829s, there's a complete flow of funds and audit trail that facilitates that process. So Scott, why don't you walk through with the folks in a little more detail how this all works?
Yeah, sure. Thanks, Reid. Yeah, as Reid said, with these deployments of new products into the market, we really have an end-to-end solution for looking at how dollars get invested into a business, deployed often in real estate, and then get back less fees to investor over years. So today we're a market leader in providing the subscription escrow product to the EB-5 market. So as dollars flow into a regional center in a project, once critical mass for that project is reached and contingencies are met across both business goals and I-526 approvals, those dollars are then move into the lending entity and are turned around and lent out often for a construction project, as Reid just mentioned. And so you'll see here we have sort of 2 orange rectangles here. And so these are where we're going to focus today as we look at a demo. So as we look at dollars flowing through and into the construction escrow and operating or drawdown account, and then tracking those dollars as they are moved into eventually the capital returns escrow or account structure. Obviously, depending on the attorney's guidance, it may be an escrow, it may just be an account structure for the capital return. Our solution's flexible to handle that in both scenarios, as is where that account structure lives, whether it's with the lending entity or the developer. Again, our solution's flexible for all those variations. So what we'll do is we'll go ahead and spend a little time with Stephen McLean, our senior product manager for EB-5 products. I often refer to him as always the smartest guy in the room. So he's going to share with us a demonstration of the technology. So enjoy about 5-6 minutes here of Stephen McLean.
Today we're going to go through the bridge replacement project and follow the funds flow for Mr. Benoit. Let's go ahead and take a look at investments. Here we'll see Benoit's account where his money will gather during the initial phase until his I-526 is approved. Within this account we have documents, which will store his passport, his I-526 approvals, as well as any account statements that are generated for his account so he can keep track of his funds. In June of 2008, we show an initial investment of $500,000. Then, in accordance with the escrow agreement, in November of 2008, Benoit's investment of $500,000 is then transferred to the lending entity's operating account. So let's take a look at the lending entity's operating account, where in November of 2008, we'll see his investment transfer over to the lending entity for $500,000 and then immediately flow to our construction escrows. We're showing his funds being distributed to two different tranches, $350,000 to the first tranche and $150,000 to the second tranche. Over in the construction escrow, we'll follow through on the first tranche, where we can see on November 2nd his initial transfer of $350,000 is deposited into the construction escrow for the first tranche. When this phase of construction completes, the money will then transfer over to the developer's operating account, where it will sit until the developer refinances the project. In the developer's operating account now, we can see the $350,000 that's transferred over from Phase 1 in November of 2008. In January of 2009, we can now see the second phase of the project that has completed, and the $150,000 that went to that phase is transferred into the developer's operating account as well. Again, the money will sit in this account until the developer refinances the project and refunds back to the initial investors. And we're showing this in November of 2010. Now let's take a look at our capital return escrow for Benoit, where we can see as soon as his money transfers to the lending entity's operating account, we start collecting fees of $10,000 annually. We're also assessing a interest on his investment to the developer, and you can see the deposits from that interest on a quarterly basis into this account. The credits and debits will collect into this account until the developer refinances the project in November, as we saw earlier. The $500,000 is transferred back to Benoit's capital return escrow. And then when his 829 is complete, the funds are distributed back to our investor Benoit. Now the funds transferred back are the $500,000 less any annual management fees and adding back in any interest collected on the account. Now when we close this account, we're including the I-829 approval as well as generating a new audit report for the investor Benoit. Let's go ahead and take a look at that audit report. This is our audit report for our investor Benoit. Up at the top, we have general information about his money and all the flows in and out. So we have all his deposits of $550,000. We have his final disbursement of $474,000. And then we have account fees on the right side for $50,000, quarterly assessment $4,800, and then annual management fees totaling $30,000, which gets us to the point of $474,000. Then in this next section, we have his investment-related activity only. So we can see his $500,000 coming to subscription, going over to the lending entity's operating account, immediately afterwards going into the construction escrow, and then as each individual phase completes, parts of his money is transferred over to the developer's operating account until the developer refinances and the total $500,000 is returned back to the capital return escrow. And then the final payout after the I-829 approval of $474,000. In this bottom section, we have the entire detailed transaction history supporting the above information.
Thank you, Stephen, for walking us through that technology demonstration. So, obviously, we went over a lot of things there. Reid, if somebody wants to see more or has some additional pointed questions, what's the right step to take?
The best thing to do is to reach back out to us and schedule a time to talk. We can go through a more detailed presentation, certainly. There may be some questions in more detail about the escrow or the account structures. We'd be happy to go into those with you, or perhaps pricing or other things. So you can contact us here at NESF, or your account manager, either Colleen or Darren, will be happy to help.
That's great. That's great. So, obviously, a couple of caveats to the demo, just from an appropriateness of information, I guess. Obviously, the fees suggested and some of those things as money flows back into a capital return account structure. Obviously, that's going to vary project by project, right? We don't control any of that. That is all driven by the regional center of the project. So, of course, the solution's flexible to handle any and all shapes of those fees. So on to questions. So one coming through here. What do the fee structures look like, Reid?
So what we're doing is we're making this very, very easy to purchase. We've got a bundled offer whereby you can get the construction and capital returns solutions as part of the subscription escrow for one annual fee. And so we'd be happy to talk that through with you. So please contact your sales representative or myself directly, and we'd be happy to go over that in some detail with you.
Great. We have another one coming through here from Sam. Can I customize the draws on the construction escrow? That's a great question. So absolutely yes. Obviously, the drawdowns, for a specific project are going to be in various tranches of various sizes over various time frames. Our solution is obviously flexible to handle any and all shapes and sizes of those and drawdown account structures.
Yeah, and I think to add to that, regional centers, many of our clients are doing multiple projects and might have different drawdown requirements from project to project. And the system's been designed to be configurable to be able to support any unique requirements that the customers might have.
Great point. We have a question coming in here from Tom. Can we get some additional information and slides for your presentation?
Yeah, and I think certainly we'll be happy to follow up, Tom, and anybody else who's interested. If you're interested in a copy of the slide deck, please send us an email. We'll be happy to send one out to you.
Great. Paul has a great question here. So this comes up a lot. Are the escrow accounts FDIC insured? The answer to that is yes, they are. The amount varies based on the banking partner that we include in the solution structure. So the accounts are covered up to the applicable amount for that one investor to a total of, let's say, $250,000 across all of his accounts with a bank. So our sub-accounting structures qualify for pass-through FDIC coverage. If the bank qualifies for unlimited FDIC, as many of our customers have today, each sub-account is covered up to that applicable.
Yeah, and that's really an important point, right? Is the sub-accounting solution that we introduce as part of the solution does enable that FDIC coverage to be rolled down to a per investor level, as opposed to just $250,000 on the overall escrow. Each individual investor has $250,000 of FDIC.
Yeah. So they really are actually segregated financial accounts.
Correct.
Yeah. Well, we're sort of rounding third base here on our time together. If you have any trailing questions, Reid, why don't you talk through who they can direct?
I think many of you know Colleen or Darren, and their email addresses are here for you to follow up with. Also, I think you probably get lots of emails from me, so feel free to send me any questions that you have, and also very interested in your feedback on the value associated with this webinar.
And if folks have more technical questions or compliance questions, do those still go through the same channel?
Absolutely.
Super. Yeah. So I guess the short way to say that is if you have something that needs to go to Stephen McLean, they will find him. They know.
Make it easy for you.
Colleen and Darren know where to find him at all times. So, well, thanks for joining us today. It was a short time, but a good time. We'll talk to you soon.